Hey, what's going on, guys? Benny Childs, founder of the Teach Me to Fish FX trading community, and I am back with another video. This is going to be a quick weekly analysis slash bias video. My analysis is really quick and straight to the point, so we're just gonna roll with it. Okay, so if we take a look at last week's candle right here, which was the week of Monday, February 26, 2024, we see that last week's candle closed above the prior week's high. All right, so first target for me is going to be last week's high. Okay. All right, so that is going to be my weekly buy side draw on liquidity. All right, now let's drop down to the daily. All right, so for Monday, all right, when I look at the fact that Friday's candle closed above Thursday's high, I'm going to be looking for Monday's high as my draw on liquidity. All right, so I will just change this to weekly slash daily buy side liquidity, draw on liquidity. Okay. Now, sometimes I will drop down to the 12-hour just to further get just a further draw. Okay. As well as I will play the market on both sides. So even though I know that my weekly and daily draws on liquidity are buy side, I understand that typically the algorithm will be looking for a discount price, right, before it takes this out. So that's why I drop down throughout the time frame. So, but same concept. This 12-hour candle closed above this 12-hour candle, so that would be my 12-hour draw on liquidity as well. Let's drop down to the 4-hour. Now, this is where it gets interesting. I see that this 4-hour candle, right? It swept the high of the previous 4-hour candle, but it closed below. All right. So I would be looking for price to come down at least to here. Okay. Let's see. All right. So I'll be looking for price to come down at least to that point. All right. Now I see that we have liquidity sitting here. All right. So we have liquidity sitting here at this low, or possible. So we have a low here, we have a low here, we have some fair value gaps. So it's very possible that we could see the market open up and begin to trade to the downside, looking for a discount before hitting our weekly target. Okay. We also and I apologize, I meant to change this. 4-hour sell side draw liquidity. Okay. Now one thing that I would do is kind of look for my dealing ranges. Okay. So with my dealing ranges, what I like to look for is the recent points of liquidity being taken. Okay, so let's change this over to here. Use the fib. So if I look to the low side, this was the last place that liquidity was swept. All right, so this low took out this low. Okay, now at the high side, it's moving. No liquidity has been swept. So I would put, I don't want to use that, guys. I'm sorry. I think if I use the GAN box, that'll look better. Let's just do it like this. Okay. So because the high side has not swept, I'm just going to go to the most highest point there. Okay. There's no sweep, of liquidity to the high side. So it's very possible that we could eventually begin to see price to come down somewhere below the 50%. Okay. Find a discount. We have a few fair value gaps. This one has been mitigated. This one has not been mitigated. This one has not been mitigated. So it could very well come down somewhere into here, right? To find discount and then shoot up, or it could come into this order block area right here before shooting up. So I mean, all you want to do is just kind of train your eye for the possibilities of where the market can go, and that's pretty much all I do. Okay, so let's drop back down to that 4 hour. Okay, so again, it's very possible we could see the market open up targeting this low right here, and possibly any of these draws on liquidity, as well as these fair value gaps. Okay. Let's drop down to the 1 hour. Okay. We can already see the 1 hour starting to turn. 15-minute is where I like to view my change of characters. Okay, so we will need to see what low created this high. All right, so when we look, we see that this low created this high. So for me, my change of character would be once this 1 hour candle, okay, has been closed below. All right, excuse me, the 15-minute candle has been closed below. As of right now, the market could just come down to any of these points and go up. But again, I would be more inclined to take sales once this low has been closed below, and then we possibly get some type of retracement before heading down, maybe to our 4 hour draw on liquidity. So I mean, that's pretty much it. That is all that I'm looking for. I mean, we can take a look at the 1 hour, and let's get a 1 hour draw on liquidity as well. So if we take a look at the 1 hour, we see, let's see, this candle. Let's see what this is. This candle's low is 18,321.50. This candle's close is 18,321.50. So it closed like right on it, and I I hate it when they do that. Um, but we basically see that this candle uh, it swept the previous candle's low and pretty much closed right at it. So for the 1 hour, I would say that this would be my draw on liquidity. Should be a buy side, which change that to 1 hour. Let me lock that. Okay. If I come down to the 15-minute, all right, I can definitely see this taking place right now because why? This this low, right, was swept with this low. Okay. So we could possibly start seeing it pull back up to the 1 hour buy side draw on liquidity or this FEG. What else took place, guys? This fair value gap was respected. Right now, the consequent encroachment of the fair value gap has obviously been disrespected. So I don't expect for this to hold, but it's very possible that the algorithm could use this as a reason to draw back up either to this fair value gap or our 1 hour buy side draw on liquidity. So I can already see that point to where is it? There it is. Us making our way possibly down to the downside, at the beginning of the week, and then possibly turn around to take this out. Or the market could just open right up, take this out, and start working its way down. Okay. So we just got to be ready, just be ready for it. Trade your kill zones. I don't know what kill zones you guys will be looking to trade, but I get up pretty early anyway for work. So I usually available around like London session or just that the time period in between London and New York, and that's usually when I catch my trades. So this I'm gonna go ahead and end the video because it's pretty long, but again, just pretty straightforward. Weekly draw on liquidity is going to be 18,372.50. Monday's draw on liquidity is going to be 18,372.50. Okay, and then when we start getting down into the lower time frames, all right, I kind of want to see again the market begin to trade lower to find discount and then come up and take our weekly draw on liquidity overall. But if not, then we know that the market will go ahead and meet that um, buy side draw on liquidity and begin to work its way down because, again, we did break all time highs and eventually we're going to need to begin to pull back. Here, let me show you guys. So you see here is the previous all-time highs right here at 17,711.75. All right, so eventually, we're gonna need to get, another pullback. We do have some unmitigated fair value gaps down here. It does not necessarily mean that the market has to come back, but that could be a narrative as to why the market is pulling back. And so this is the last pace that liquidity was swept on the downside. We have not had like a sweep of liquidity, right, on the upside. So we would need like a high to be swept, all right, and then a swing high to be created, right? And that will give us our defined dealer range. But right now, this is just a proceed for me type dealer range. So, all right, guys, I hope this video has helped. I will do my best to check in with you guys throughout the week so you can see how my trading is going. I guess a quick update. I don't know what happened, but uh, I don't know what happened to this account right here. Um, oh no, okay, yeah. So I don't know what happened. I just looked up. I think Monday or whatever. Not Monday, but what was yesterday? Friday. Or actually, it was Wednesday. Excuse me. And I woke up Wednesday. I noticed that I had a new evaluation account, and I took those trades. Let me see if I can. No, it's not gonna show. But obviously, it was a $50,000 eval account, and I took those 4 trades and ended up getting the account to $51,081.30. You guys know that all you need to do is get these accounts to the $50,000 accounts up to $53,000, which I've done for that one. And I've done for that one. Now, I also had a $25,000 account, um, eval account that I passed, which it basically disappeared, and again, this one appeared in its place. I reached out to Apex. I haven't heard anything back to find out, hey, what happened with that eval account. So yeah, so obviously I'm kind of doing another one. So instead of $125,000 in prop firm money, I have 100,000 now, and I'm gonna work on passing this 50,000 to put me up to 150,000. Hopefully, they can recover that 25,000, and once I pass this, that will put me up to $175,000 in prop firm money, and I'll be looking to get these activated so I can begin to get payouts on my trading. So yeah, so that's gonna be it, guys. I know that this video is just running right now, so I'm gonna go ahead and go. Thank you so much for tuning in. Like the video. If you're not a subscriber, feel free to subscribe. And if you have any charts that you would like for me to analyze, if you like the simple approach that I have to the markets, feel free to let me know down below. As well as I can show you guys, well, I have other videos, but I can keep showing you guys how it is that I take my trades. So, all right, guys, until next time, I hope you all stay well, and I'll talk to you later. Bye.